So there's no reason to be scared of taxes, but there are some smart things you can do to be better with taxes. Be smart about what state you declare residency in and don't overpay taxes. You don't want a $6,000 refund every April. That could be an extra $500 a month to help you get out of debt or invest or whatever your goals are at that time. Don't give a free loan to the IRS.
Welcome to the Military Money Manual Podcast. Hello, podcast listeners. Spencer here from the militarymoneymanual.com and author of the new book, The Military Money Manual, A Practical Guide to Financial Freedom. All about how military service members can achieve financial independence while they serve in the military. You can learn more about the book. It's audiobook, ebook, and hardcover. Looks really nice. Shop.militarymoneymanual.com or militarymoneymanual.com/book. Either of those links will bring you straight to the book. And I'm here with my good friend and co-host, Jamie, for another episode of the Military Money Manual Podcast. And today we're talking about taxes.
That's right, Spencer. It's tax season now. So if you haven't done your taxes yet, you're probably at least thinking about them or starting to collect your tax statement. Quick reminder and disclaimer, this is not intended to be specific tax or financial advice. You have to research current regulations and laws and make the best decisions for your specific situation. Neither of us are certified CPAs or investment professionals.
Nor do we play them on TV. Definitely not a CPA.
We should,
though.
We totally could.
Yeah. Oh, yeah. We totally could, man. We do. Maybe we play them on this podcast, but no, this is all for entertainment and informational purposes only. Please don't make decisions off of what we're telling you today. Just use it as general knowledge and information to make your investment and tax decisions. But for today's episode, I've got three main taxaways or takeaways. If you
I see what you did
there.
They
are a little pun. But first of all, stop paying state income tax. I see this a lot, especially with my troops. I've got a troop right now. She's paying state income tax to Kansas. And she obviously went through basic military training, BMT, in the Air Force in Texas. And so we'll get into why that's important in a couple minutes. But stop paying state income tax. Even if you get it back when you file your tax return, that's just added paperwork. It's more work for you. It's more work for the state. And it's not necessary. So, and we'll talk about how you can avoid paying state income tax in just a bit here. So that's number one, don't pay state income tax. Number two, do your own taxes if you have a simple return. If your only income is sourced from the military, so you're only getting a W-2, a Form W-2 from MyPay, from DFAS, from the military, that's a simple return. Just take that. For most of the tax prep software now, you either link the MyPay to the tax prep software, or you just upload the W-2 and it pulls all the numbers out for you right off the PDF. And there you go. You've pretty much done your taxes at that point. After that, it's just answering a few simple questions, maybe talking about like how much you contributed to your Roth IRA, and that's it. You're probably done with your taxes. And I remember I used to do my own taxes from 2008 to 2018, probably 10 years I did my own taxes. And every year it was pretty basic. It was pretty simple. And then finally, so that's number two, do your own tax return. Number three, don't be afraid of taxes. So honestly, if you're in the military and your only income is from the military, even if you're dual military, unless you're like maybe dual military, lieutenant colonel, major type, you just don't make enough for the IRS to care about. Sorry. And so much of your military pay is an untaxed allowance. So flight pay, BAH, which is a big one for everyone, basic allowance for housing, basic allowance for sustenance, BAS, all of those allowances are tax-free. And so you're really only being taxed on your base pay plus a couple other pays. And that's it. And so, while your monthly paycheck might be $10,000 and you're making $120,000 per month, if you're, say, a senior captain or a young major, your actual taxable income is going to be way less than that. So
and we'll give some examples of that too.
Exactly. Yeah. So, and then, so let's say you do your own taxes, and like I talked about in point number two, if you make a mistake when you file your tax return, honestly, don't worry about it too much. I have made a couple mistakes on my tax returns in the past. And all that happens is the IRS sends you a letter and says, hey, either, these numbers don't add up, or can you provide more evidence of this? And either you do, or you just pay the tax. Unless you are like willfully trying to evade taxes, it's actually pretty difficult to get to the point where you're being audited and you have to pay fees or fines or whatever. So don't be afraid of taxes. Do your own taxes. Stop paying state income tax. And those are the three things I want you to think about today. Now, before we jump in too much further, I just want to say, if you're enjoying the podcast, if you could please leave us a 5-star review on Spotify or Apple Podcasts, wherever you listen to podcasts, we would really appreciate it. And especially, if you're getting some good information up here, it takes you like 5 seconds. Just hit that 5-star, hit submit. And that's a nice way that you can tip us for the information that we're about to give you in this podcast today.
Yeah, we would definitely appreciate that. Spencer, taxes are important, but sometimes can be a little intimidating, like you mentioned. And it's so true that it's an important topic for all of us. We all have to deal with it. Many military members don't know that they have options when it comes to state taxes. We've mentioned several times in past episodes about how you're a Texas resident and I'm a Florida resident, even though neither of us live in either of those spots right now. So we've both used this. So we'll share exactly what we've done and some guidelines that you might want to look into, and we would encourage you to look into. Just the other day, I was chatting with someone, Spencer, I think I mentioned this to you, who is stationed in Texas, but was still paying taxes in their home state. New to the Air Force, and kind of knew it was something, but didn't realize the impact of it. But by giving him the idea to change his residency to Texas, where he's stationed right now, which is completely legitimate, he'll save $309 a month. And he'll be able to put that towards crushing his debt snowball and get out of debt even faster. So that's a quick example of how important and impactful this can be for you. Remember, your home of record is a completely different topic. People throw around that term a lot, but it's not. Your state of residency and your home of record are different things. So Spencer, when you say stop paying taxes, what do you mean by that?
Well, don't stop paying taxes. Just
taxes. Sorry, I need to learn how to read first.
Yeah. Yeah, you definitely want to keep paying your federal taxes, but if you can establish residency in a income tax-free state, then you don't have to worry about paying state taxes. And I dove into this a little bit over the last couple of days. And the law is very vague on this. Essentially, all you have to do is show intention to permanently reside in a state in order to declare residency there per the military. And that can actually even just be filling out the form saying, I'm a legal resident of Florida, or I'm a legal resident of Texas. You don't have to even be in the state to do that. Now, granted, depending on the finance person that you get, they might ask for, well, do you have a driver's license from there? Do you have a car registered there? Do you have insurance there? Do you have property there? There's different things that can establish your intent to permanently reside there. Some of the things they mentioned in this law document, this lawyer's document I was reading the other day, ownership of real property, registering to vote there, registering a vehicle, driver's license. But really at the end of the day, you can essentially just, or you're stationed there. That's another way to do it as well. Or if you were born there, or if you, when you joined the military, that's where you came from, or you went to school there. There's so many ways to establish residency in a state when you're in the military. And honestly, other than a couple states like California, for instance, most of the states, they're not gonna hunt you down, right? And they just don't have the manpower to go and check, like, oh, do you actually intend to permanently reside here? Because when you're on military orders, you have to reside wherever the military sends you. So it's only really becomes a question when you get out of the military and you start collecting a civilian paycheck. While you're in the military, do whatever you can to establish a connection to an income tax-free state. And then if you're currently stationed there, that's the easiest thing to do. So, there's lots of bases and a lot, Jamie, you're going to talk about some of the states that have no income tax, but there's lots of, if you look at this list of states, chances are there's probably a base, an Army, Navy, Marine, Air Force, Guardians, Space Force. There's probably a base of your branch that's in that state.
Yeah, but it's not like you're cheating the system here. You're legally allowed to declare residency, and you have some options, like you mentioned. Some states would just absolutely rob you if you're not even living there or have no intention to ever go back, or situations like that. Just because your parents live there or you commissioned out of that state, or whatever the situation may be, that your MyPay says California right now or New York or whatever, you do not have to leave it there. If you're a legal resident of California, for example, and stationed in California, they'll tax your military pay, but you have options. As of this recording, the following states have no income tax for anyone: Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. If your state wasn't listed there, don't worry, though. You may have other benefits, right, Spencer?
Yeah, that's right. So other states exempt active duty military pay for troops, especially if you're stationed outside the state. So Arizona, for instance, is one of those states where you have to file an Arizona. You only have to file an Arizona state income tax return if you had state income tax withheld. So if you're stationed outside of the state, though, all of your military pay is exempt from Arizona state taxes. So the way that most states in the union tax income is based on domicile or based on location. So if you are a physical resident of that state, then you are subject to their laws and to their taxes. So it would, you can't be a resident of California and live in Nevada physically. Like you have to live in one place or the other. And this actually, because of the tax laws are so different between Nevada and California, people in the civilian world, this is a really tricky and complicated thing where they might work in California but live in Nevada just to avoid paying the California taxes. So and like you said, Jamie, tons of states there that don't tax income for anyone, civilians or military. And I think, some of the big ones there that I see right off the top, Alaska, you've got Fairbanks, Eielson, you've got Joint Base Elmendorf,
Richardson. Yeah.
Yeah. Florida, you've got Homestead, you've got
McDill and Tampa, everything
Cape
on the
Canaveral,
Gulf Coast.
Hurlburt, just naming Pensacola, there's a Navy base.
Yep.
So multi-branch. Nevada, you've got, Las Vegas. Obviously, you've got Fightertown, USA there. South Dakota, you've got bases there as well. Texas, the Texas is a big one because for the Air Force people listening to this podcast, a lot of you will go through training in Texas at some point in time, whether it's Joint Base San Antonio, Lackland, what else is down there? Randolph, Laughlin, if you're in pilot training out there.
There's Goodfellow. And there's huge Army posts in Texas too, like massive Army posts. Yep.
El Paso, Fort Hood, so tons of big, and then Washington again, all these states have bases. And so there's a good chance that you're going to probably be stationed at one of them at some point in your career, and you'll have the opportunity to, declare residency there and not have anybody think twice about it. And I think that should, if you are paying state income tax and you see an opportunity, it might be worth, depending on how long you're going to stay in the military, it might be worth taking a 2-year PCS to somewhere where you can easily declare, that you're a resident of that state and you're going to stop paying state income tax. So, okay. So that's point number 1, stop paying state income tax. Now let's talk about point number 2, which I mentioned at the beginning of the episode, where I think you should do your own taxes. So Jamie, what can you tell people about doing their own taxes? How hard is it in the military? Is it expensive? What do you think?
For most military members, like you mentioned in the beginning, taxes are pretty easy to file for yourself. And you gave the example of military only income, and I would maybe even take it one step further. Is if your spouse is working too, and you have 2 W-2s, and even maybe a little bit of investment income, or you own one house, like that's still probably considered a simple return. And and not going to be that complex. So in a lot of cases, you should consider doing your own taxes because they're free through services like the Military One Source Mill Tax Service. And if you Google search military or militaryonesource.mil, or Military One Source taxes, you'll be able to find that mill tax service. It's completely free to file your federal and state tax return through them for most cases if it's not too complicated. But as your stuff gets more complicated, you may want to start considering having a CPA review your files, do some tax planning before tax season and things like that. So, Spencer, when should people start looking at maybe paying for that, and how expensive would that be if they do want to hire someone to do taxes for them?
Yeah, sure. So I'll address the first point. A good CPA, depending on if you're just going to like go to, Joe down the street in your local town, which is actually probably not a bad option. Just find someone who's well reviewed, has good references. Jamie, you hired a CPA recently, and you called a bunch of them, and you could tell a couple of them wanted your business and a couple of them didn't. So it made actually the decision pretty easy for you. And one thing that I would say is, have a list of questions, especially for your specific situation. So if you're in the military, call them up and say, hey, I had 2 months tax free last year. You ever dealt with that on a tax return? And if they say, nope, never seen that before, then maybe go on to the next CPA. Yeah. And it's not hard. Declaring tax-free combat zone tax exclusion income isn't hard, but you just want someone who's seen it before. So you're not the test case, and they're not learning about it while you are. But yeah, it'll cost about $400 or so, $400 to $500, I would say, if you just walk down the street. If you go online, you might be able to find it a little bit cheaper. If it's like completely remote or, email based. But the biggest thing is just, collecting. You're still doing most of the work because you're collecting the documents and then you're turning them over to the CPA. And all they're going to do is open up the same tax software that you have and punch the numbers in. And then they're gonna, and in fact, they're not even gonna do it. They're gonna hire someone, a kid to do it for $10 an hour. Worker. Yeah. Exactly. Yep. Yeah. And they're gonna punch it in. So, they'll double check in. They'll make sure you're getting all your deductions and credits and everything. But at the end of the day, I highly, and actually, one way to, if you're still a little afraid of taxes, do them yourself on mill tax, and then hire a CPA to do them as well, just for 1 year, and see how close the numbers are. If the CPA isn't saving you more than what they cost, then do it yourself. And, it's not that big of a deal. So, but back to your original question, when should you start thinking about a CPA? If you've got a lot of self-employed income, and I'm not just talking about it like a few 1099 miscellaneouses, because you referred a couple credit cards. That's fresh in my mind because I got a couple in the mail today from American Express for handing out my Amex Platinum referral link. And Jamie, you got a few of them too, is that right?
Yeah, which is really surprising that we both got them on the exact same day, considering the distance there. That's kind of ironic, but yeah.
Yeah. So, but yeah, and it just says, hey, we paid you $55,000 Amex. It doesn't even say it. It just says we valued the points at $550, and so that's income that I haven't paid taxes on. They're declaring it to the IRS, and now I'm going to have to go and pay taxes on them when I file my tax return. It's going to lower my refund a little bit. Not a big deal. So even if you get a couple 1099s, it's still not a big deal. When I would really start thinking about getting a CPA is if you have multiple properties, or if you have rental properties, if you're running a business, if you have any kind of self-employed, like if your spouse has like an Etsy thing and they're making over $500 or $1,000 a month, it's probably time to just check in with a CPA and say like, hey, make sure you're paying your self-employment tax. And if you're driving for Uber, if you're doing anything like that, it might make sense to just check in with a CPA and make sure you're not missing anything. If you've had a big windfall, like say, a family member passed away in the last year and maybe you inherited an IRA, and depending on the value of the IRA, I mean, it could be the largest dollar amount that you've received in your lifetime. That's a good time to just consult a CPA and say, what do you recommend I do with this, and what's the most tax efficient way to deal with this? But really, other than that, there's not that many situations for military service members. Again, unless you're running some kind of like side business, or if you've got a more complicated situation. But Yeah.
Yeah, I think rental properties stuck out in my mind as I heard you answer that question, because CPAs can get really in the weeds with like depreciating assets and how to claim losses, and some business strategies like that to minimize how much you're making, which means therefore how much you're paying taxes on,
Yep.
depreciating value of the house and things like that. But I've had some years where I hired a CPA. When I had a CPA in Hawaii, his tax return, it was relatively simple out there, to be honest. And we paid him $500 out there, which, Hawaii prices maybe too. We also had a CPA for a few years in New Jersey. And I've had a lot of years where I did it myself as well. So it just kind of comes and goes, kind of bounces back between the complexity of it. But I've actually done what you recommend, Spencer, and I've did my taxes through that free H&R Block software on Military One Source and compared it to their numbers. And I figured, well, it's just kind of worth my time investment, because it does take a few hours to do it, to compare. And 1 year, the CPA got me $2,700 extra refund than what I would have calculated on my own, just because of the way he phrased some of the questions that triggered a memory of something that we could add to our deductions that I would never have thought of on my own. So sometimes just a little outside perspective $2,700, that's a big impact for a, $300 or $400 CPA bill.
Oh, absolutely. I think the other advantage to hiring a CPA as well is they've probably dealt with hundreds, if not thousands, of returns. And so they know what they can honestly answer. When sometimes you'll look at those questions and you'll be like, oh, like, can I actually claim this deduction? And a CPA will be like, oh, absolutely. Like, there's no question in my, like you'll read the question and it'll be in this like legalese, and you're like, I don't know if I qualify for that exactly. Like, I don't want to make a mistake. And the CPA will read it and be like, oh, 100%. Like, there's no way if you got audited that the IRS would ever question that, So that's the other advantage too to hiring, professional help. But again, like, especially if you go on mill tax and you fill out the whole thing and it says like, hey, $2,000 return, probably just is, especially if your income is $40,000 to $50,000, maybe 1 year have a CPA, just double check, make sure you're not doing anything too crazy. But again, if you have a simple financial situation where, you pay rent, you got your military W-2, even if your spouse works on, as a civilian and she's got a W-2, the W-2 basically has all the answers on it. And then even if you have like taxable brokerage accounts, well, they're going to provide you a 1099. And honestly, for most, for Vanguard, Schwab, Fidelity, you just provide your login details. Milltax, which used to be H&R Block, well, they used to hire H&R Block, now they just call it Milltax. But Military One Source, the Milltax program, will just log in for you, pull your details out, and throw it all into the program, and it's done. It's it's a brilliant system, and honestly, it's a lot faster than it used to be.
Yeah, the other big benefit that I just briefly mentioned about a CPA, that where they can really make their money for you, is tax planning. So meeting with them halfway through the year, at the beginning of the year, what do you project your income to be? Should I do Roth or traditional contributions? And some of the things like that. Should I, what should my charitable donation strategy be? And you can just really get into the advice side with a CPA. They can crunch some numbers and estimate what your tax burden is going to be and how many exemptions you should have in MyPay and things like that. So I think there's a lot of benefit there for tax planning as well. And that's why I hired a CPA again this year for some of the complex situations we have right now.
And yeah, I've also hired a CPA this year, and I have for the last couple of years. But a lot of that, like Jamie is saying, is tax planning, because I have this business, so I have Military Money Manual, and my personal, income, my personal financial situation is actually incredibly simple. It's the military W-2, it's my wife's income, and that's it. Well, actually, I will one more caveat on that though. She gets paid by an overseas company, and so because she works for an overseas company, and so there's actually some tricky things there with like foreign earned income exclusion and
foreign taxes paid,
like foreign taxes paid. Yeah. Exactly. Yep. So you can, so if you're in one of those situations, like let's say you're in Germany and you're married to a German national, or you're in Japan and your spouse works on the economy, then that could be a situation right there where having a CPA who kind of knows the knows the landscape would be valuable.
So Spencer, I just saw this article on Forbes. I want to bring up real quick. It's 2015, so it's a little outdated, but my guess is the numbers are still the same. They found that 93% of business owners were overpaying on their taxes. So assume that 9 out of 10 people are overpaying on their taxes too. Maybe I haven't seen a study that proves that. I've heard like 1/3 of Americans overpay on taxes, but haven't seen like real good data on that. But just say it's 1/3. That is worth getting a CPA sometimes to make sure you're not in that 1/3 if there's some more things going on than just very simple returns, or maybe just checking in every couple of years, like you said, just to see.
Yeah. I still maintain though that like if you're a captain or lower, if you're a tech sergeant or lower ranked than that, you're probably fine unless you married a doctor. And,
yeah,
like in some mill-to-mill situations, you will have higher income, but most of the time, like so much of military pay is not taxed. It just doesn't make sense to hire a CPA because you're just not going to save that much money. There's just not enough deductions and credits in there. And we'll talk about that in a little bit about the standard deduction. But
I guess I want to caveat my last statement, just make sure I wasn't pushing too hard towards a CPA, just trying to counterbalance the benefits of a CPA. I 100% agree that most people's tax returns are simple enough to take advantage of the military one tax. So hopefully that didn't come over too passionate. Sometimes I get a little emotional and excited.
I think it just depends, and I'm a firm believer in hiring a CPA when you need one. And I'm looking at my tax records right now, and so many of them, like I filed myself,
Same.
So another hot topic, Jamie, or a common question is military spouses and the taxes that they have to pay when they're working outside the home. So spouses, thanks to an update to the Service Member Civil Relief Act, can claim the state of legal residence, the same one that the service member claims, or a previous state that they've been stationed in. So that's especially useful. Like, let's say that you worked in Oklahoma and you had a remote job, and then you moved to Hawaii. You could keep Oklahoma as the state that you want to be taxed in, and not move to Hawaii and get the much higher Hawaii state income tax. So, but what's really advantageous there is you could align it with the service members' state of legal residence. So again, like Florida, Texas, Alaska, like these, Washington state, like these are the states that you should be thinking about in your head. Hey, I got to get to there so I can declare legal residence there, or I got to find a way to declare legal residence there. And then if you're married, or if you're going to get married, your spouse, no matter where they are, can jump on board and say, you know what, I also intend to permanently reside in that state with my spouse, my military spouse. And at that point, you qualify for what's called the Military Spouse Residency Relief Act. And again, this was a 2018 update to the 2009, I think, Service Member Civil Relief Act, or SCRA. You've heard us mention the SCRA before in regards to credit cards and to getting your interest rates reduced on loans, but this is a separate subsection of the act. And like I've said, it lets you essentially declare. It gives you a lot of flexibility, a lot of options. So you can be taxed in the state you're currently in. So let's say that you're in San Antonio, Texas, and guess what? No state income tax. So that's probably a good place to keep your legal residence. Or, if you move to, let's say, California, well, then stay a resident of Texas, and then you don't have to pay the state income tax. You can also vote, and there's a couple other benefits as well, but the main ones are voting and taxes in the active duty spouse's state of legal residence. And that was Veterans Benefits and Transition Act of 2018. They added that to the SCRA.
Yep, Spencer, thanks to that Military Spouse Residency Relief Act and those changes, that's how my wife is a Florida resident. We've had some issues with HR professionals or even some CPAs that weren't familiar with this. So several times we've had to bring in a copy of, an article from Military One Source or some kind of irs.gov kind of resource that explains the Residency Relief Act, and say, hey, because my husband was PCS'd here. He's here on military orders in Alabama. I don't owe Alabama taxes. I'm a Florida resident. And then eventually they kind of get it. But even her W-2 got messed up this year. So we're going to have to go back and get them to correct it. So pay attention to this one closely. Some people may not be familiar with it. It is kind of new and it's not very common. But very, very important for spouses. You do not have to pay taxes. You should align. You do not have to pay state taxes when you have the opportunity to align it with the service members, Texas, Florida, Washington, those kind of states that they've been in the past, like you said.
Right. I think what happened there was, so the law was passed in 2018, which meant that in 2019 was the first time that CPAs and tax professionals and everybody started encountering it. Well, then when in 2020, when everybody was about to go do their 2019 taxes, COVID hit and everybody was like, there's no rules and taxes aren't due until June and like the world is burning. So I think that's kind of what happened there and then everybody kind of lost track of the Military Spouse Residency Relief Act, MSRRA. You'll see it abbreviated as, but it's really good and it needs to be hyped up more. It needs to be talked about more. So maybe I'll do an article about it. I don't think I've done an article about it on my site.
That's a good idea.
But yeah, keep an eye on your CPAs and your HR professionals as well, and make sure that they understand what the act allows, and make sure that they're coding your W-2 correctly, so you're not. And then if you do end up paying, some, let's say you're in Alabama and you're actually technically a Florida resident, file a return and say, hey, they screwed up. I need all my money back, because that could be a couple $100.
And we have had to do that before, and you just get it all back. It's pretty simple.
Yep.
One other thing I wanted to add, Spencer, is the time to tell them you're actually a Florida resident or Texas resident or whatever is in the new hire process when you're filling out your W-4, telling them how much you want withheld from your taxes. So don't wait until tax season to tell them you're actually an Alaska resident or a Washington state resident. Do it when you're a new hire, or if you've never done it before, go to HR tomorrow and tell them that you should have, based off of what we talked about, based off the Military Spouse Residency Relief Act, you should have been a Florida resident all this time, or whatever your situation is.
Right. Okay, so we talked about 3 main points today. Stop paying state income tax. We've really harped on that. Number 2, do your own taxes. We've just kind of addressed that. So now let's move on to bullet point number 3. Don't be afraid of taxes. A lot of people are intimidated. A lot of people have these like really weird notions about taxes.
The boogeyman.
And they're completely like so afraid of the IRS. And the IRS does I'll have to go look it up, but I think it's like 1 million, maybe 100,000 audits a year, and there's 300 million, tax returns filed. So maybe you can look that up, Jamie, while I keep talking here. But like we mentioned earlier, you really just don't make that much for the IRS to care about you. Now we're not saying cheat on your taxes. That's 100% what we're not saying. We're just saying, do your best, fill out the forms to the best of your ability. If you get confused at some point, that's the other thing too with the mill tax is they have professionals that you can call. I'm pretty sure it's 24/7 because they're stationed all over the world. Call them up and say, hey, I don't understand this question. Do I qualify for the Savers credit? When it says, individual retirement account contribution, is that my TSP or is that my Vanguard IRA? Call them up and ask them these questions. I guarantee, if you stump them, that's the time to go talk to a CPA. But most of the time, for most military situations, they're going to have the answers for you.
Yeah, before I found the Military Money Manual and all the goodness that before this podcast existed, I actually called them one year, and I have a success story I want to share real quickly. I put in both my TSP and my Roth IRA as the same contribution because I didn't understand that they are different with their own contribution limits, like we talked about a few weeks ago. And so I called them and said, it's showing that I overcontributed to my retirement accounts. What do I do? Kind of freaking out a little bit. And the guy was like, I wasn't really sure. I hadn't done a great job of explaining it. And we ended the call without a resolution. He actually called me back 20 minutes later and was like, I think I realized what you did. Did you say TSP and a Roth IRA? I was like, yeah, I did them both. Is that terrible? And he's like, no, that's fine. It's completely okay. So that's the level of customer service that I personally have experienced with this free resource on the Military One Source. Just great people, and they're very knowledgeable too. So I just want to share that kind of success story.
Yeah, that's awesome. Yeah, every time I've interacted with any of the mill tax types, and I think I called him a few times, right when I was first in the military and filing taxes for the first time. Yeah, just absolute, really friendly and really nice. And then I've never actually had the horror or the honor, depending on how you look at it, of talking to the IRS. But for what I understand too, like they're pretty friendly as well, and all they want to do is like resolve the situation. And at the end of the day, like all they're looking to do is collect the taxes that they're owed, right? Like they're not out to get people usually, unless you are like willfully hiding income and doing really sketchy things. But if you're listening to this podcast, you're in the military, you probably have a little bit of integrity,
you're
hopefully.
Probably on the up and up.
Yeah. So just remember, like, you're a small fish, give it your best effort. If you mess up, they'll let you know. And maybe send you a letter and ask for an explanation. And then, but if you're on your way to financial independence, you've got a great savings rate, and you make an honest mistake on your taxes, you're going to have the emergency fund. You're going to have the savings set aside there to deal with it. And if most of your income is coming from the military anyways, you have withholding. So you're not going to get a surprise tax bill when you go to file your taxes at the end of the year. It's only, for people usually who have like self-employed income, or maybe they were, their withholding was coded incorrectly on their W-4. But most of the time for military service members, like you can just throw a 10 into your exempt. I haven't done a W-4 in a while.
10's the max. Yeah.
10's the max exemptions.
For my pay.
Yeah. For my pay.
Yeah.
And you're still going to get a refund. So, I think and that's not advice to go throw 10 into your, there's a couple calculators. I think there's one on the IRS website that kind of like spits out a number of like how many exemptions you should claim. But a few other points about taxes that I want to mention. So you might have to pay taxes on points and miles. So it's kind of a tricky situation, and the credit card companies starting interpreting it differently in the last couple of years. So if you get rewards from spending, that's not considered income. So like if you get a punch card from Subway, right, and you get 10 punches and you get a free sandwich, you don't have to pay taxes on that sandwich. But if you refer someone and say, hey, go shop at that Subway, and then Subway gives you a free sandwich, that's income, because now you're performing a service and getting, a reward or
payment.
Income as a result. And so, in that super weird analogy I just came up with, in this case, when you spend money on your Amex, Platinum card or your Chase Sapphire Reserve, go check out our episodes about those cards and how you can get your annual fees waived, or check out militarymoneymanual.com/UMC3 for the ultimate military credit cards course. And I'll walk you through how to get your annual fees waived on that. But if you're just running, if you're paying for things on your credit card and you're earning points from that, you're not going to have to pay taxes on that. When you would have to pay taxes is if you're referring people to the cards. And that's what the IRS and the credit card companies, it was kind of a rule change. I think back in 2018, maybe 17.
Yeah, it sounds about right.
They started issuing 1099s. And at first people were kind of freaking out, but it's, it kind of makes sense that you'd have to pay taxes on it, because you're basically getting these points by referring people, which is exactly like the weird Subway analogy I just used. So, and then typically they value it about a cent per point. So if you refer, most Amex cards, they cap out at 55,000 Amex membership reward points. So at least that's how it is for right now on my Amex Gold and my Amex Platinum card. I can refer enough people to earn 55,000 points a year, and Amex is valuing them at a penny per point, which is pretty fair, I think. Because I was just looking at a redemption on American Airlines the other day. I can move 100,000 Amex membership reward points to Etihad and then book a $2,500 American Airlines ticket. So 2,500 divided by 100,000, that's 2.5 cents per point, which is pretty good. So when they value it at a penny per point, I think that's pretty fair.
Yep. And we talked all about referrals in episode 26, if you missed that. So how to refer cards for both Amex and Chase. So another kind of off topic good thing to mention here that is heavily debated. So maybe I'll try to keep my emotions in check. The question is, should you keep a mortgage or student loan debt around just for the tax advantaged interest? Because student loan interest and mortgage interest can be deducted on your taxes in some cases. What I found looking this up the other night, taxfoundation.org estimated that in 2019, less than 14% of Americans itemized their taxes. So when the tax laws changed a few years ago, the standard deduction for married filing jointly went way up, like huge change. And in 2021, the married filing jointly standard deduction was $25,100. So what that means is if you didn't have more than $25,100 in charitable donations, deductible interest, or any of those other deductions, then it's basically worthless for tax purposes. Say that you're super charitable and you donated $10,000 to the Wounded Warrior Project or whatever your favorite charity is last year. Well, if it was only $10,000 and that's your only deduction, it's not going to affect your taxes at all because the standard deduction is now so high at 25.1. And again, that may change in the future, but so unless your mortgage interest is higher than 25.1 or that combined with your other donations and things, it's probably not even affecting your taxes because so many Americans are now taking the standard deduction. So back to the kind of the mortgage question, to me, when you get rid of your mortgage payment and experience mortgage freedom, which I'm a huge fan of personally, your annual expenses go way, way down. And as we talked about in episode 23 and 24, when we talked about financial independence or FI or FI, the way to achieve FI is by having 25 times your annual expenses and savings. So if you no longer have that, $2,000 a month in your mortgage payment, for example, your annual expenses are going to be much lower, and that'll enable you to achieve FI sooner and give you the peace of mind. If you get out of the military, your expenses are going to be lower, which means you need less of a savings to cover, a few months without a job or during the transition or things like that. So just a quick example, if your annual expenses are currently $60,000 a year and you drop your $2,000 a month mortgage, then your annual expenses would go down to $36,000 a year. So your FI number would drop from 1.5 million to 1 million. So you could be FI. You could achieve financial independence $500,000 sooner, which is a big difference. So I know
massive.
I promise not to get emotional. I failed. Sorry. I am a little opinionated on this, but what do you think, Spencer?
Absolutely.
On the mortgage?
Yeah. It just doesn't make sense. I remember hearing this when I was in pilot training. And that's actually one of the reasons I started the website was because I just couldn't. I was like, no, I'm right on this, and I can't understand why nobody else can see this. But people were talking about they're like, oh, I'm paying the minimum on my student loan payment because the interest is tax deductible, and I was like, well, but your interest is only like 4% on the loan or 6% on the loan, and so your principal payment is like $200, and your interest payment is on top of it. So it's like a $300 payment, and like maybe $250 is principal and $50 is interest. Well, you can only deduct that $50, and this was before they changed it a couple of years ago, and they raised the standard deduction really high. This was back when it was much lower, but even then it didn't make any sense. So it just it's mind blowing that people would keep a debt around that's continuing to like hamper their finances. And I mean, you can do the math too and work it out. The other thing, Jamie, is, a $2,000 a month mortgage payment is one thing, but it's not $2,000 a month of mortgage payment that's deductible. It's a $2,000 per month of interest.
Yeah.
That would be deductible.
Great point.
Which means that like if your mortgage would have to be like, depending on your interest rate, like probably $6,000 or $7,000 a month mortgage payment, of which $2,000 is interest. Obviously depending on like your loan value and all those other factors. So yeah, it's absurd to me that people would, I mean, they're basically, a phrase that my wife likes to use is or maybe I came up with it, I can't remember, but
give her the credit. Just give her the credit. Yeah.
I don't want to attribute something to her that I actually came up with because it's rare, but the stepping over dollars to pick up pennies, like there's literally, if you could pay off your mortgage or your student loans and be debt free, and then all of a sudden you have all of your income that you get to decide to do with, but instead you're paying interest on this loans and you're keeping it around and you're keeping a monthly payment so that you can save a little bit on taxes it's just
maybe
absurd.
even paying PMI still and stuff. Like, no
So
thanks.
no thanks. It's ridiculous. I can't, anybody who starts with that, very sus. So
It's very hip of you to use
thank
that.
you. Yeah, some of the kids were using it at work today. All right, not kids, whatever. I mean, usually the standard deduction, unless you're making, like large charitable contributions or you're running a business or something, usually the standard deduction is the right way to go for the military. But again, like all this tax software, it's gonna calculate, okay, like tell me what your deductions are, and it's gonna say, look, if you claim itemized deductions, you're gonna claim $12,000. If you claim the standard deduction, you're gonna claim twice that. So
which one would you like to do?
Idiot?
We recommend you take the standard deduction. Yeah,
exactly. So trust the software. I mean, if you got a crazy situation, back it up with a human. But most of the time, with the simple returns, like we said, with the W-2, it's going to be pretty easy. So while we're talking about taxes, Jamie, let's talk about bonuses. So that's something that, a lot of career fields in the military are eligible for at some point. Now with the new BRS, almost everybody's going to be eligible for a continuation bonus. Yeah. At the, I think it's like 8 to 12 year mark is kind of the range that they can offer it. I was actually just offered it. Although all the paperwork says 2018. So it doesn't give me a lot of confidence that they haven't like updated their software since 4 years ago. But taxes on bonuses. So what do you know about that, Jamie?
So we hope to do a full episode on bonuses and windfall kind of topics in the future. But anytime you get a big bonus or continuation bonus, or career field specific retention offer, pilot bonus, anything like that, you should expect that 22% of that amount will be withheld for tax purposes. So that's just kind of the standard from the IRS. If any other extra bonus kind of pay is withholding at 22%, and that will cover most people from having a huge tax bill. The worst thing that could happen is you spend all your bonus and then all of a sudden you end up owing 12% or 22% of that money and you already spent it. That would not be wise, and you probably wouldn't be listening to this podcast. But 22% is what you can expect to be withheld from bonuses, and then hopefully you get a lot of that back. So that might be a time where you have a larger refund if you had a bonus pay during the year. Spencer, one question I have that I think would be good for listeners, we did an episode in the past where we talked about deployments and the SDP, or the Savings Deposit Program. That was back in episode 13, if you haven't listened to that one yet. So what are the tax impacts for having the SDP, where you can get kind of guaranteed 10% return there?
So the SDP, Savings Deposit Program, when it's growing, so when the accounts open, they're not going to issue you any tax forms, which is really nice. But then once you leave the tax-free zone, I think it's 90 to 120 days after you depart, it's going to automatically withdraw and deposit into your checking account unless you rehack your tax-free time again, which, back when the wars were on, it was a lot easier to do for some career fields like air crew. But you're going to get a 1099 INT once in the year that it actually withdraws. So my latest example was 2000. So I opened an SDP in 2017. I had it in there until 2019, and then it deposited into my checking account end of 2019. So in 2020, I finally got the 1099 INT to file with my 2019 taxes, and it was it'd been in there for 2 years, so it was like almost over $2,000, I think, of interest, which is really nice. But you're gonna have to pay taxes on it as income. So it's separate from your CZTE, your combat zone tax exclusion income. That's only your base pay, essentially your federal pay.
Okay, great segue, because my next question was about deployments and deployment verification. I've gotten this letter in the past, and the first time it's a little bit scary, and I think people kind of freak out when they do. But sometimes you get a letter from the IRS asking for more details about your deployment, basically to verify that you were actually deployed to a tax-free combat zone. So what do you tell people, and what do you do when you get a letter from the IRS that's asking about CZTE and tax-free zone pay?
Yeah. So the first thing I would do is just type into Google CP-04 tax. And guess what? You're going to see my website pop up. And I've got an article there, how I respond to the IRS combat zone tax letter. Basically, all they're doing is they're the IRS, right? So they're crossing their T's and dotting their I's, and they just want to confirm that you're claiming tax exclusion for certain pay periods, and they just want to make sure that that is in fact true, and you're not trying to defraud the government. I don't know why the Department of Defense can't just talk to the IRS directly behind the scenes, and why every year they have to send out. I mean, they probably have to send out millions of these letters to military service members. And so the simplest thing to do is if you've separated from the military, this can be a little tricky. So I would behoove you to keep your LESs, and then possibly if you got TDY orders, or you've got orders of any kind for deployments to tax-free zones, keep those, especially if you've separated from the military, and it's going to be harder for you to log into DTS. But if you're still active duty, or you're Guard or Reserve, you still got a CAC card, log into Defense Travel System, DTS, just pull your PDF copies of your TDYs out of there, and you can send that to them. I think last year I got lazy, and I just wrote down the dates I was deployed and mailed that back to them, and they were like, yep, you're done.
Cool.
So, yep. And I know some guys, they've called them, and the first person who picks up is like, oh yeah, what days were you deployed? And they just tell them over the phone, and they type it into a computer, and they're like, okay, you're all set. And that's it. So, they're just doing due diligence. They probably have a checklist, and they got to follow it, and they just want to make sure that people aren't scamming the system. But it's what you claim your benefits, right? Like you'll see it on your W-2, your tax form, as a Q code, and I think it's in the bottom right hand corner. But when you go to use any of the mill tax or any of the tax filing softwares, it'll be a little section to add, what kind of or did you receive combat zone tax exclusion pay.
All right, so a couple other topics as we continue the list of kind of random thoughts about taxes. Moving expenses for a military PCS. A lot of times the tax software will ask you about those. Most often, I will say in my non-professional tax non-advice that military PCSs, you probably will not be able to claim moving expenses in there as a deductible expense. But if you had something you think might qualify, unreimbursed moving expenses, that's a great time to reach out to those military one-source tax counselors for help. Also want to mention some bases have volunteer tax offices too, but who knows how good they'll be. That might be kind of hit or miss. So take that for what it's worth. Spencer, we kind of mentioned this earlier, but what if I have a side hustle like driving for Uber in South Carolina while I'm stationed there, but I'm a Texas resident? What do I need to do with that? Could that affect my taxes either federally or state?
Yeah, so for most states, any non-military income that you earn is going to be subject to the tax of the state that you earn the income in. So in the example that you gave, right, you're driving for Uber in South Carolina, but you're a legal resident of Texas according to your W-4 and the paperwork that you have on file with the Department of Defense. Sorry, doesn't matter. You're going to have to pay South Carolina taxes. I don't know what their taxes are like, but so in my situation, so I have a company. It's an LLC here in Hawaii, and I'm physically here in Hawaii. So I have to pay Hawaii state income taxes on my business revenue or profit. And even though, it's an online business, it doesn't matter. Like I am the business essentially, and I'm here in Hawaii. So I have to pay taxes on that. So, and that's non-military income, and the law is very clear. So my military income is only subject to the state taxes of Texas, because that's my state of legal residence. But my side hustle, my business income is, I think it's more than a side hustle now. We'll call it a business.
Yeah, there you go.
is subject to Hawaii taxes. So, but you're not going to owe income tax on like your capital gains, investment returns. So things like that. It's only like income that you earn as an individual or as a self-employed person. You're going to have to pay taxes to the state based on your income. But for like all the other things, you will only pay taxes in the state that you're a legal resident of, which is hopefully one of the income tax-free states. But some of the income tax-free states have taxes on investment return, capital gains tax, and interest and dividends and stuff.
Yeah.
So just a couple other random notes before we close up with some real world examples here. Usually for most military couples, married filing jointly is going to be the best option. But, again, like put into the tax software and figure out what the right answer is for you. And if it's more complicated than that, talk to a CPA. So just remember that tax brackets are progressive. So your lower income owe less of a percent than the higher income earners. So if you're in the 22% bracket, it doesn't mean that all your income is taxed at 22%. It's just the income that's over the 12% bracket. So I'm just going to use general numbers because I'm too lazy to look up the actual brackets right now. The other way you can think about it that I've seen online, there's a great YouTube video called like buckets of taxes. And essentially you have to fill that bucket first before you move on to the next one. So let's say like the first $10,000 is taxed at 10%, right? So that means the first $10,000 you make in that year is taxed at 10%. So you pay $1,000 of taxes. And let's say the next bracket is 10,000 to 20,000, just to keep the number simple. And the tax rate goes up to 20%. Okay. So your marginal tax rate is 20%. So on the next $10,000, you're going to pay $2,000 of taxes because it's 20%. So between, the first $20,000 of your income, the first $10,000 was 10%, the second $10,000 was 20%, your effective tax rate is 15% because you're paying, you're making $20,000 of income and you're paying $3,000 of taxes, right? But your marginal tax rate is 20%. So a lot of people get this taxes, like people's brains just shut off when they start talking about taxes, but they say, oh, I don't want to make any more money because I don't want to be in a higher tax bracket. And that might be true for the only situation that I think that can be true is with like capital gains, because capital gains is based on which income tax bracket you're in. But for most military service members, again, none of that matters. Yeah. So don't worry about making more money because you're going to move into a higher bracket. The higher bracket is only taxing that next dollar that you make into that bracket or into that bucket by that higher tax rate. Everything you're already on the hook for all the taxes underneath that bucket or bracket. So never be afraid to make more money and move into a higher bracket.
Yeah, so I just pulled them up real quick, the tax brackets. So 10%, 12%, 22%, 24%. And if you're above 24%, come be the host of this podcast. So it would be huge if, for example, you knew you were close to the line between 12 and 22 and that was going to jump you all the way down. But it's only that amount that is above the 12% bracket. So it's not as drastic of a change as it seems when you look at the percentages there. But if you're on the line, you can look at it, do some estimate. If you have a CPA, you could talk to them about it, contact the Military One Source, and they can kind of help with those strategies. But a lot of people are like, oh, you're in the 24% tax bracket. That's a lot of taxes. Like, it is a lot of taxes. Like, but
yeah, so
it pays my paycheck too, I guess. So
right. I mean, honestly, the more taxes you pay, the more money you're making. So you think of it as a good, as a good thing. But just want to run through a couple of real world examples. So in 2015, I was stationed in New Jersey at McGuire Air Force Base, or Joint Base McGuire Dix Lakehurst to be exact. I filed my taxes, and that year, just trying to check real quick here, but I got $116 refund. So that was pretty good. So one thing we haven't talked about, Jamie, is that you can, you really want to set your tax withholding so that at the end of the year, you're going to get as close to a zero refund as possible. And the reason for that is that's your money, right? And if you're giving it to the IRS every month rather than having it in your pocket, it's money that you're going to get back, right? But over a year, if you missed that money over 2021, you missed out on a 25% stock market increase, right? And that could have been money that you were throwing in every month into the stock market and dollar cost averaging your way, to a great stock market. So, some people are like really stoked when they're like, I got $3,000 back. And it's like, you could be a little bit more efficient. Now, I will say, me personally, I'm kind of ambivalent on it. If you're the kind of person that you're like, ooh, I got $3,000 tax refund, I'm going to, put 1,000 of it into my IRA. I'm going to spend 1,000 of it and I'm going to invest 1,000 of it. Right. Like, or I'm going to pay $1,000 worth of debt down. Well, that's great. But most people aren't going to do that, right? They're going to be like, sweet, new computer. Or, I can finally afford the down payment
Vacation.
on that Ford F-150. So, I think it's definitely it depends on the person you are. But I know for myself, I always tried to kind of see how close I could get to a zero refund. And it's more efficient that way because you get a larger paycheck and you can invest it every month. But if you're finding that you're going to have to like actually pay money to the IRS when you file your taxes because you were too close and you're not able to do that because you don't have the savings and you're not following the principles of financial freedom, well then, first of all, read my book, but then second of all, fix it, right? So reduce the number of exemptions that you have, and that way more money is withheld, and then that way you're closer, you can fix the problem and you're closer to zero.
If you're in a situation where you find yourself that you're going to have a tax bill that you're not quite prepared for, one idea that you could consider is just delay filing your taxes. So if you figure this out, February 15th, for example, don't file your taxes until April 17th, or I think it's April 18th this year because of some holiday or something, but whatever. Normally it's around April 15th, but wait till April to file your taxes. That gives you really 3 or 2.5 months to save up for that bill if you got caught off guard, and then fix it for next year.
Yeah, the one thing I'll mention is, so you don't have to file your tax refund until April 18th this year, and usually every year it's April 15th, but there must be like a Sunday or a Saturday or something in there. But if you owe any money, it is due by tax day. So if you find out that you owe money, you got to make that payment.
Start saving.
Yeah. It's by, and then there are ways to extend when you file your taxes. There's forms you can fill out to like get until June or even October, if you're like waiting on documents to come in. But if you're going to owe any money, you gotta make that payment. So try to figure that out, like Jamie was saying earlier, rather than later. In that 2015 New Jersey, my marginal tax rate was 15%. So I was in the 15% bracket, but my effective tax rate was 5%. So super low there. And I think it was actually even lower than that because I'm looking at my 2015 taxable income and it was $64,000. I'm pretty sure I made more money than that as a new captain. I think it's, and I ended up paying, $3,800 of taxes that year. So, and I got $116 back. So I'm pretty sure the effective tax rate is even lower than 5% because that 5% is being calculated on my, wages, salaries, and tips. But, that doesn't include
most of it's not reported.
It doesn't include a BAH and allowance and everything. So I was probably paying 3% effective tax rate because I was probably making $100,000 a year.
So I have one of mine from New Jersey. Can I share? I pulled my 2017 report from New Jersey as a mid-level captain. This is a year that I filed my taxes on my own through the Military One Source that we've mentioned several times. AGI, adjusted gross income, was around $86,000 that year. Taxable income was to the IRS was only $31,900 after all the deductions. So my tax bill ended up being about $3,800 for the year, and I got a refund back because I wasn't expecting as many tax-frees as I got, or something probably like that. My marginal tax bracket was 15%, but my effective tax bracket 2%.
Wow, yeah,
that's pretty money.
I just looked at my December LES for 2015. So my total entitlement for that year was $93,000. There you go. And I paid $3,000 of taxes. Yeah. It's pretty crazy how tax-free or military pay is. Um, 2018 was a good year for me tax wise and life wise, I guess too. But I was tax free for the whole year. So I was stationed in Abu Dhabi and the United Arab Emirates. My wife worked for an overseas company as well, and she was completely outside the U.S. And so I earned $94,185 as an O3 captain with 8 years of active duty service. I paid $4,400 in Social Security taxes, $1,000 in Medicare taxes, and $0 in federal income tax. So
That's awesome.
that's a pretty good year, and no state income tax since 2010. So, yeah, and then that year as well, I contributed all the money to my Roth TSP because I was tax free for the whole year. So I got tax free money, tax free income goes into Roth account untaxed. It's going to come out untaxed. It's going to grow untaxed. And I got matching. So the matching was actually paid into the traditional account because that's the only place the matching can go. But yeah, that was a good year for the old Spencer net worth right there. And then how about you got any numbers from Hawaii, Jamie, when you were out here?
Yeah, I looked up our 2020 numbers from Hawaii as a 04 AGI $92,400 basically, and like you said, BH was a huge source of income out there, so that's nowhere close to what we actually were getting paid. Taxable income according to the IRS only $67,600, so go from 92 to 67. That's pretty sweet from the start. My tax burden that year, the taxes I owed was just under $1,200. So I got a refund. And then after that, I'm like, okay, what can I do to stop getting refunds? So I went up to 10 exemptions in my pay. I'm like, oh my goodness, you're killing me. So that's when I went up to 10 because I kept going up, 2 or 3 a year and still getting exemptions. Now, as I've gotten fewer tax frees over the years, and now, I won't get any for the next couple of years. I probably need to reevaluate that a little bit, but that's another good example of how much you actually get paid in the military compared to what the IRS is considering for taxable income.
Right. Yeah. So I think in 20, this must have been 2020, $150,000 of entitlement on my LES, but I think I only ended up paying like something absurd, like $5,000 to $8,000 in taxes. So, again, just like the tax benefits of, especially if you're in a place that has a really high BAH. So
yeah,
it's pretty good in the military, but, all right. I think that's enough time spent on taxes, at least for this year. We're over an hour right now. Jamie, what do you got for our review?
Yeah, so as a review for today's episode, thanks for sticking with us. Taxes are important, like we said. 3 main points to take away from today: evaluate your state income tax and stop paying state income tax. You have options. Number 2, do your own taxes because most people have a simple return, and use a free filing service like Military One Source Tax program. And number 3, don't be afraid of taxes. The IRS isn't a boogeyman. They're not out to get you. Do your best and be honest. And if they send you a bill, you'll be fine because you're pursuing FI and savings, and emergency savings is in place. Your savings is growing every year. You're going to be okay. Don't be afraid of it. It's not that big of a deal. Last thing I want to say one more time is we appreciate all the listeners and the subscribers to our podcast. We've seen amazing growth, and Spencer and I, we really do appreciate each and every one of you, especially our listeners that come back every week. Just very, very thankful for that. If I could ask one more time that you would help us out, if you're enjoying it too, please leave a 5-star review on Spotify or Apple Podcasts so more people will find helpful episodes like this one.
Give a shout out to Ryan on Instagram, The Good Cadet. They were a recent follower. And then let's see who else is in there. Heather was also reached out on Instagram as well. And I got a couple of emails as well. Let's see if I can pull Mike. That was a recent one. Thanks for that email. And I think I had one more, Shea and Andrea. So Owen David. So thank you all for reaching out on Instagram and email. Really appreciate it. And it's just really awesome to be a part of your journey to financial independence and to, just do this podcast with you, Jamie. It's also been a real treat. So thanks for that. Leave the 5-star reviews, subscribe to the podcast, and we'll see you next week. Hey guys, it's Spencer again. Before I let you go, I want to let you know about my new book. It's called The Military Money Manual, A Practical Guide to Financial Freedom, and it's available right now at militarymoneymanual.com/book. This is the book I wish someone had handed me on my first day in the military. In this book, I cover the exact money tactics, investing strategies I use on my path to financial independence before age 40. I break down the math of FI and I explain the exact dollar amounts you need to retire. The book is full of easy-to-apply financial advice specifically for military service members and their families. I cover tax-free deployments, the thrift savings plan, and many more topics only military personnel can relate to. This book was written specifically for you, whether you're active duty, guard, reserve, a military spouse, enlisted, or officer. Both E's and O's will benefit from the lessons in the Military Money Manual. If you're in the Army, Navy, or Air Force ROTC, or if you're a cadet or midshipman at West Point, Naval Academy, and the Air Force Academy, this is the perfect book to start your military career with. Again, the book is available right now at militarymoneymanual.com/book, an audiobook, ebook, and my personal favorite, the hardcover book. The hardcover book was printed right here at home in the United States of America, and it will look great on your bookshelf. So check it out. Let me know what you think. And remember, podcast listeners can use promo code PODCAST to get a special discount. It's called The Military Money Manual, A Practical Guide to Financial Freedom, and it's available right now at militarymoneymanual.com/book. Thanks for listening.